And we've seen it time and time and time again throughout history where inflation occurs when they print money. Why is it that we haven't learned the lesson? Is it because we want to kind of address the short-term pain and don't care about the long-term cost at the moment? Or is there something else going in there that humans are just really stupid and we don't learn history? Like, what's going on?
You know, so the way that we print money it's nothing new, really. I mean, fiat money, like a lot of people talk about fiat money as if it's like something that, really just started to exist in like, the 1970s or something, or got out of control in the 1970s. And really, like the way I like to think of it is that money is inherently credit. Any financial system, I think, will inherently turn into a credit-based system, where even in the oldest of old monetary systems, like the Code of Hammurabi talks about how farmers would create credit contracts where, one farmer basically would have a lot of seeds and another farmer needed seeds to plant his farm. And so the rich farmer says, hey, poor farmer, here's 10 seeds. You can go and you can multiply this into your new farm. Oh, but here's a contract where you owe me 11 seeds next year as repayment. And that contract, essentially, it's a credit contract, but that contract is functionally money-like. And that's become, as sort of economies have evolved over time, those contracts that we think of as credit have evolved into money. So like in a modern monetary system, the majority of the money that we all use is bank deposits. And bank deposits primarily come from loan creation. So, I go out, I borrow money to get a mortgage, to purchase a home, and that loan creates a deposit. And that deposit, in the Hammurabi days, that contract was worthless except between the two farmers. But in a modern system, that contract has become money, basically, in the sense that anybody can now take that contract and go anywhere and use it as money, because it's exchangeable for basically anything. It's not just exchangeable for seeds now. You can go into, Home Depot and Walmart and, go on Amazon and use those deposits, that contract, basically, to buy whatever you want, because it's moneyness. I like to use the term moneyness in the sense that every instrument we use, whether it's Bitcoin or bonds or 30-year treasury bonds or gold or all these different instruments, have a certain degree of moneyness. But bank deposits have, I would argue, if not an extraordinarily high level of moneyness, the absolute highest moneyness. And so all of these loans that create deposits are now money, in the sense that you can go out and they're fungible for basically anything. And so in a modern monetary system, the creation of credit, I think, is sort of the natural evolution of just the way that all financial markets have always worked across time, because you always have people that have demand for money, and you always have people that, either have more assets or more money that are willing to say, hey, you know what? I don't need this. I'll give you a little bit, and maybe you can go out and you can do something good with it, and you can repay me with a little bit more in the future. And so in a weird sort of sense, I don't want to call it a pyramid scheme or Ponzi-like, because the system does really rely on a perpetual sort of increase of credit over time. But there's a Ponzi-like aspect to it when you're not creating the seeds. Like if that farmer just goes out and you create this contract, and the other farmer just goes out and, takes a dump in the piece of paper and buries it in the dirt and forgets about it, well, that's the part where this all gets really problematic, because when you're just sending money out to people and no one's doing anything, no one's building anything, that becomes Ponzi-like, in the sense that you're not creating the real resources that actually support that contract, because that contract is only viable if the farmer actually plants the seeds and produces that 11th seed to be able to, repay back to the original farmer. It's the thing that makes the whole system work. And so I always like to say that the creation of debt is, on a balance sheet level, it's the creation of an asset and a liability. There's nothing really inherently good or bad about that. It depends on how it's being used. And a lot of the times, debt is used in really good ways. Like, people borrow money all the time to build great companies or build homes. And I mean, actually, building homes is the primary thing that we do with debt. Is we go out and we build useful big blocks of wood that are, real resources. And so when you're doing things like that, I don't think there's anything necessarily problematic about the creation of more money over time, because you're creating things that give that money value. They back that money. Whereas when you're just doling out money and people are, just sitting around, having Zoom calls for fun and playing video games and, crap like that, it's like, well, of course that's inflationary. You're not creating the real resources that actually support the money in the first place. So, and I think, that's a really contentious discussion, because you get into like these political discussions about, this group of people, they don't have enough. So, why can't we take some money and redistribute it to these people? Or, and then, a lot of the times the people that have the money will say, well, why? I worked hard for this. I borrowed money when I was young and poor, and I built something great. Like, why should I have to give up what I've produced and earned over time and potentially harm my family and my future generations and offspring just to benefit somebody else? You get into all these contentious political debates about how this works. And so a lot of the times the government just comes in and says, you know what? Screw having to try to tax rich people or whatever it is. We'll just print the money and give it to this group of people that need it for whatever purpose.